Well, welcome back. With us today, we have Sophia Kearney-Letterman, the senior economist of FHN Financial. Now, Sophia does a basic prediction of the economy, if you may. Classic economist. She's got a bunch of numbers. So let's go through some of those numbers. Sophia, give us sort of a overview as to, let's start with GDP growth and then maybe break it down a little bit about what industry sector do you think is going to be flourishing in 2026?
Yeah, well, first of all, thank you for having me. I appreciate it. I'm a classic two-handed economist, right, on the one hand and the other hand. So, but we do have a lot to look forward to, I think, in 2026, right? We're optimistic about growth in 2026 and GDP growth. We're cautiously optimistic because we're coming off of quite an interesting year, for lack of another word, right? 2025 was quite uncertain. I think that put businesses a lot on the back foot in terms of making hiring decisions was a really big one. But we're hoping that we have a little bit less uncertainty this year, or maybe even just that businesses have normalized to uncertainty, right? They can't put off decisions forever. We ended 2025 on a pretty strong note, actually. We had a bumpy start to the year, negative GDP growth in the first quarter, a rebound in the second in 2025, pretty okay growth in the third quarter, and we're tracking 5.3%. We watched something called the Atlanta Fed GDP Now, which puts the whole year somewhere around 3.2% for 2020.
For this size economy, that's amazing.
For 2025, yeah, that's really strong. I mean, also think about where we were in April of 2025. Yeah. Would you have guessed we would have 3.5% growth? Probably not. The big contributors to growth last year, one of them probably won't carry over as much. It was trade. We actually saw a really positive impact from trade after the drag in the first quarter because we saw imports slow in the wake of tariffs and exports increase. We think that'll be smaller this year, positive but smaller. Yeah. But the other really, really big one was investment in technology and the buzzword AI. We saw a lot of capital intensive investment in technology in 2025. That's probably going to continue into 2026, right? It's every time you open a newspaper or turn on the TV, you hear the word AI. And you really are seeing firms invest in that space, right? And it's data centers and it's all the equipment and it's all the resources. The sort of interesting piece and what the Fed has been dealing with and what I think the average person is also dealing with is it's been strong growth without job creation. So when we look at non-farm payrolls, for example, right, which is a measure of the number of jobs added per month, in the first quarter of 2025, we had positive job growth around 111,000.
Is that an effect of AI, you think?
You know, I think it's a double whammy of AI, right? Of businesses last year in uncertainty, where did they decide to prioritize and where was there the capital deployed? It was into technology. But I also think it was the uncertainty of 2025. It was that I'm not sure what the economy is going to look like. I'm not sure what tariffs are going to settle out to. I'm going to wait. Right? I'm going to wait to see when I'm going to hire and how I'm going to do that. And so you look at payroll growth, it started to slow in April and May, and it actually ended the fourth quarter, negative. Yeah. We saw a pullback. Now, some of that was federal jobs, right? We saw a big cutback in federal government payrolls. But some of that also was, again, just that uncertainty. And so the hope and sort of what we're expecting to see is some of that job growth does come back in 2026 as we normalize, right? And we had the Fed cut interest rates last year to stabilize the labor market. Again, we have a strong growth forecast, but I think the thing we're all adjusting to and trying to figure out is what does this investment in technology look like for the labor market as well?
And based on what you just said, you know, for us to think like if more companies spend more money on AI, how in the earth will we create more jobs?
You hear everything of people saying AI is going to make work obsolete. We heard this morning someone say work's going to be optional. But then you also hear a lot of people talk about, no, it's a complement to workers, right? I think when you look at, if you look at the job creation we saw last year, it was super concentrated in one industry, and that was healthcare. That's where you saw the majority of jobs created. And
America's getting older.
Right. And so it's not to say that that's not a sector that's not embracing technology. It absolutely is, right? But it's also a reflection of, I think, where people work and what they do is going to be different. Just think about the last 10 years, right? What did we encourage young people to study? Software development, right? That was sort of go be a software engineer. What's one of the first jobs to be replaced? Software development.
Yeah,
so what is it now?
Coding is gone.
And so,
what should our kids be studying?
I think what people need to think about is look at the industries where there's going to be an impact from technology and what's it going to be.
Yeah.
I think a lot about some of the more technical trade-related things that we have, right? I'm notorious for talking about plumbers Maybe we'll have robots that replace plumbers, but right now, when you need a plumber, you need the actual person.
Yes.
Versus,
I'll welcome
maybe
a robot,
a coder.
though.
A robot could come.
I'm just
I
saying,
think that
no
is the
appointments.
next evolution. But I also think about more service-centric businesses. And I also think about, there's going to be an interesting balance of technology, but people also want human connection, right? Restaurants are a really interesting example where some restaurants have tried away with all human connection, order on a screen, never see anyone. And they haven't actually necessarily had that much success, because there is a level of connection that humans want. And so I do think there's going to be a meet in the middle.
Yeah.
I think the tough part is when we think about the economy is there's a little bit of a displacement period that we're in. And the question is, how long is that, right? And when you think about, obviously, it all comes back for me to the Federal Reserve and interest rates. What does that mean for the Fed when they have a dual mandate of maximum employment and stable prices? And so they're navigating through this sort of shifting environment right now.
And I think you've already said that you expect, 2 to 3 cuts?
Yeah. So our forecast has 2 to 3 cuts this year, 25 basis point cuts.
Last question, Lauren.
Can you tell me a little bit more about the letter K, this disparity that we've been talking about?
Yeah, people have talking a lot about the K-shaped economy, right? And so you think about the letter K, what is that? It's up and it's down. And it's sort of the different experience that you're seeing from individuals on different levels of the income spectrum. So high income consumers are really fueling the consumption that we've seen in the last year. Whereas the lower and even the middle are starting to pull back, right? I think the biggest impact has been, again, we have this really sluggish labor market in the last year, but then the really big impact is inflation has been a problem for 5 years. And so we as economists talk about year over year price change, right? I mentioned 2.7, that's year over year. But when we look at the cumulative impact over the last 5 years, that's what households are really struggling with, right? Any gain that they've seen in income has been eroded. You look at things like food that used to be, grocery prices used to be pretty flat. You didn't see that much price increase. In the last 5 years, they're up almost 30%, right? And so those are real things that are impacting consumers. And it's part of why we think consumers are going to continue to spend, but there's a little bit of a seatbelt on consumer spending growth because it is really built on those high income individuals.
So that's all the time we have. Thank you, Sophia.